Hey bro, you read the Business Time article on 13 December last year, right? I think inside the article it mentions that our Singapore government expect GDP growth of 1 to 3% in 2024 and headline inflation projected at 3 to 4%. Now, imagine that our economy only grow 1% next year and the inflation is 4%. How do you think that translates to your company?
If I'm a normal company, that means my revenue will grow at 1% and my cost will go at 3 to 4%. Does that mean we are losing money?
Hello everybody, so welcome to our new series talking about challenges that entrepreneur faces and some of the possible solutions that hopefully we can help. So today with me is Wing Leong, my co-founder of Grof. So Wing Leong, have you read the news recently about inflation and the challenges that small businesses are facing with regards to cash flow, managing cash flow?
Yeah, certainly. I think it's not an easy time for businesses, in 2023, and the outlook in 2024 doesn't seem to be much better as well.
That's quite worrying. So if let's say if a client come to us and say how can Grof help you to assess your business, assess the cash flow position, what will be the advice that you will recommend?
I think firstly then there's a need to actually look internally, right, and assess, looking at the financial statements, looking at the cash flow statements, and examine sort of how is the cash flow trending, right? Is it cash flow trending up? Is it cash flow trending down? Right, and if there's, let's say, a very clear trend of how things are going and it's unhealthy, then there's a need to actually take a deeper look, right, to examine what is exactly wrong, right? Are customers delaying payments, right? Is cost going up? Is the borrowing cost going up? Interest going up, right? And things like that. I think that's how entrepreneur can start by examining internally on the financial statement in order to determine any issues.
Right. So essentially, right, when you talk about cash flow, there are two parts to it: inflows and outflows. So inflow basically are actually the revenues, what your customers are paying you, and outflows are actually your expenses, right? Expenses or overheads. So this could be, let's say, your rental. This could be your in the case of service business, right, it could be salary, for example, right? So these are really your outflows when it comes to a cash flow. So essentially, when you talk about maybe a good cash flow or positive cash flow, is basically you have more inflows than outflows, correct?
Exactly. If your money cash flow is negative, I think that's a clear sign of to be worried. It means that money is coming out of your pocket month after month.
Right. So when it comes to, let's say, cash flow, right, how do you assess whether a cash flow is good? Is there any tools out there that you would recommend?
I think firstly, there's two concepts of cash flow, right? Which is account receivable and accounts payable. Right, account receivable is how much your customers owns you, right? And account payable is how much you own your suppliers, right? If your account receivable is growing without a corresponding growth in your revenue, I think that's a clear sign to be worried about.
Right.
It just means that your customers are not paying you on time and delaying payments. And there's a question: are you able to even collect the cash from the customers?
Correct. So when it comes to, let's say, having all this data on the entrepreneurs or the SME business owners' hand, right? So in your opinion, right, is there any tools out there, right, that can help our SME owners to make a good informed decision about their inflows and outflows?
I think certainly there are a lot of financial tools out there today, right? I think the most fundamental ones are, for example, your accounting software, right, that allows you to basically do everything, record your transactions, right? Another sort of a growing piece is relating to your expense management software, right, that actually has a focus on how much you're spending on and how do you actually set budget for your spending as well.
So I believe even for, let's say, some of the card system that are out there that is paired with, let's say, a business account, you can actually issue, let's say, virtual cards to employees. So when they are making spendings for the business, the owners can actually get real-time feedback about what they're spending on. You can even set like money limits about what they're spending, so you don't have to worry about them going overboard.
Yeah, I think the kind of two key difference between the accounting software and the expense management software. Accounting software is kind of backward looking, right? It records what has happened in the past, right? And then the accountants need to go in and clean up the accounts to have a proper statement of what has happened. The expense management tool is expected to be more forward-looking, right? It gives you sort of a real-time notification of what people are spending on. You can even set budgets. So for example, what typically we encourage our clients to do is that you set a limit to the cards that's issued based on your budget, and anytime, if the spending is exceeded, right, there's a requirement for the boss to actually approve further spending. Right, that actually helps to curtail your spending and give a more real-time reflection of what's happening in the business.
So talking about staff, right? We also talk about being a service-based business. Staff cost could be one of the biggest component in your P&L. And a lot of experts out there are advocating outsourcing, for example, and even some are talking about remote work. What are your thoughts on this?
I think this is a growing trend. I think like hiring in Singapore is getting difficult. Cost is high. The fight for talent is still ongoing, right? And trying to retain sort of a talented, Singaporean, it is quite difficult, right? And generally, I kind of see it as two pieces, right? If you're a service business, you may run, let's say, marketing agency or a software development house, right? You will have sort of a number of, let's say, operational staff. They may be sort of digital marketers. They could be, for example, engineers, software engineers, right? I think one growing trend is to explore the idea of remote work, right? And remote work is simply the idea of you, instead of hiring in your home market, you want to hire them overseas, right? To basically take advantage of the currency and the wage difference between Singapore and other countries, right? And definitely, I think that's not a holistic solution, right? Because you do still need sort of Singapore, employees to help sort of manage a lot of the local processes, the client engagement, right? And even when you are, let's say, trying to arbitrage the wage between Singapore and other countries, right? There is a lot of things to be concerned about too. Firstly, it's really the compliance. Right? Are you compliant in hiring that staff in that country, which you are probably not familiar with, right? And then sort of the cost to be incurred, for the service provider provide you with that particular, let's say, payroll service over there, right? And the second part is really, questioning: are you confident of managing a team that is based overseas? Right? Because as the distance grow, the cultural differences is there, right? And how do you be comfortable with managing a team that is not sort of near you?
So I think these are very real life example that we are seeing in our client. To touch on the earlier part about outsourcing, right, is that we also see a growing trend of, let's say, operating business with, let's say, about 15 headcounts. Previously they might need one senior accountant and one accounts executive, to manage the accounting and maybe the admin work of the company. And we're also seeing some of them actually coming to providers like us, for this outsourcing type of service. And I think the savings are quite substantial. I think some of them, are save up to, let's say, two-thirds of the annual cost of, let's say, the salary previously. This could, for SMEs, right, it could be the difference between profit and loss, right? And it is something very real. And I think where providers add value are really about retention and also keeping the professional advice up to date for our clients. Thanks for your time, Wei Leong, right? In summary, right, we talk about how do you assess whether your cash flow in today's context, in the high inflation and also high interest rate type of environment. How do we assess, whether your cash flows are out of whack, whether is it reasonable, right? We touch about, adopting digital solutions. We explore the possibility of, let's say, outsourcing and remote working. So thanks viewers for your time. And if you know any business owners that need any advice on looking at their cash flow, so feel free to reach out to us. Thank you.
Thank you.